of improving generations of lives in underserved communities. They shared their outrage over injustice and inaction, and they marveled at how quickly they were making progress. Just one generation ago, there weren't any Black and Latinx tech startup founders and investors. Their numbers were still paltry, but this week, these men and women filled a house. When former President Barack Obama stopped by for a visit, he fit right in. Their visions aligned, he said, to harness technology to confront the biggest challenges that America faces. Challenging assumptions. When we made a commitment to invest $10 million per year of our own money for a decade in an investment fund, we set out on a singular quest to find a better way to invest dollars in people. This is the backbone of our work in venture capital. Now, we're finding answers that can have repercussions reaching far beyond the finance industry. Venture capital-backed companies drive the U.S. economy, stimulating the creation of companies worth trillions of dollars. When that big money benefits the already advantaged and fails to benefit society, especially those on the lower rungs of the ladder, it's exacerbating the growing divides that separate us. We're seeing it happen right now. Investors and corporations are making record profits as the stock market, even during rocky times, demonstrates a long-term rise. We're gravely concerned that the not-so-hidden costs of that success threaten the promise of America. Consider this. The Federal Reserve Board in 2021 found that a typical white family owned about $184,000 in family wealth. A typical Black family owned $23,000, and a typical Latinx family owned $38,000. The average wealth gap between Black and white families, $12 per $100 of white wealth, pretty much hasn't changed in decades. The gap for Latinx families, $21 per $100 of white wealth, has only slightly improved. Oh, and women? There has been a lot of talk about how women's salaries are finally closing in on their male counterparts, but there are still gaping gender disparities in basic wealth, bank savings, property, investments. Also, even within any given racial group, women tend to make less than men. And white women still make more than their Black, Latinx, and Native women counterparts. Generations ago, women were largely confined to a narrow choice of work: secretary, teacher, or nurse. That's changed somewhat. Today's young women have a broader range of work opportunities than baby boomers had before them. Unfortunately, this is not the case when race is taken into account. Opportunities for people of color in the U.S. haven't really improved over the decades, according to a 2020 analysis by the Washington Center for Equitable Growth. The types of jobs Black and Latinx people in the U.S. tend to work in remain low-paying and devalued, which further entrenches inequality. Nowhere are these imbalances more obvious than in the technology industry, where some of the world's greatest fortunes have gone disproportionately to white male founders. This remains the case even as, collectively, global corporations have been spending $6 to $8 billion per year on diversity and inclusion commitments. We can say objectively that money has been largely wasted. Fewer than 5% of big tech employees are Black or Latinx. Women are also lagging. It's been that way for decades. When we launched Kapor Capital more than a decade ago, we committed to doing things differently. We are an impact investment firm seeking to bring about positive, measurable change with our funds, along with financial returns. Impact investment funds aim to do good, often founded with a specific mission to address environmental or social issues. In recent years, impact investing firms in all asset classes, venture capital,